So what we're going to do now is just scroll back up, go back over to the start page, and make some changes so that we can show that our business is profitable. Now, it mentioned that there's a few things that we can do. One of them being is that we can increase the monthly income. So let's just say we put that at $4,000. And I'm going to put the bakery. Let's increase you as well, 7,500. And specialty coffee, 6,000. And another thing that we can do is we can increase the annual growth, and that'll increase our revenue. So let's say it grows 12% instead. And this one grows 17%. Sorry, my computer's been running all day. And let's see, we'll grow 22% for this one. So now the revenue will grow a little bit faster by doing so. We could decrease our cost of goods. Again, only you will know what your cost of goods are. But in terms of making the business plan work and show profitability, we could also play with the cost of goods. I'm not going to do that on this here. We could play with our expenses, our monthly expenses, and say, okay, maybe we only want to spend $2,000 monthly advertising. So we'll bring that down a little bit. Let's see, what else will we do? Maybe insurance is only $500 monthly. We'll bring that down a little bit. All right. The other things that we could do is we could decrease the amount that we spend for our startup costs. So let's say we take equipment and machinery to $7,500. And then we'll take furniture and fixtures to $5,000. And we'll take signage down to $2,000. We still want some nice signage. All right. Up our cash on hands off as well too. I think I made that change. So we can change our loan amount. We'll make the loan amount 100,000. Cash on hand is going to equal that amount. So when we take out a loan for 100,000, the bank's going to transfer 100,000 from us to them. Our stockholders' equity needs to equal that as well. And so we'll see the red go away. All right. So now we made a few changes here. All right, let's take a look. Let's go back to the dashboard and see what we got. Here, year one, still showing a loss. But let's scroll down and see what's going on. Still $170,000 loss. Let's take a look. Still don't break even. We'll go down further. We do eventually show profitability, but let's see here. And in this particular one, we do not run out of cash. So you'll notice two changes from what I initially, from our initial numbers that we enter. You'll notice that profitability fills in here. So our company shows profitability by October of 2031. We don't break even. Now, you have understanding that break even factors in depreciation, which is kind of a phantom number. And so whether or not you're profitable and your break even are two different things. It does not mean that your company is not profitable just because you don't hit your break even. It also does not mean that you won't hit your break even. It just means that within that first 5-year period, you do not reach your break even. The company cash flow is still below 12-month reserves starting off. It's still below 6-month reserves. However, over here, you'll notice that we do not run out of cash within the first 5 years. And the lowest, our minimum cash balance is $60,000. So, you know, this is something that you can run with if you want. and know that you're projected to get as low as $60,000 as your balance before you turn it around, or you can make further adjustments. So what we'll do now is we'll take a look at uh, the other adjustments that you can make. We'll take a look at the income statements, the balance sheets, and the cash flow, and what it looks like in each of those, and you'll get an idea of what adjustments that you want to make from there. Again, keeping in mind that even though these show losses for the year, you'll notice that the large loss here, smaller loss. Then the losses start going the other way because the company's turning around and you're starting to actually make money. So this one does show that the company does begin to make money and show profitability. And if you scroll down here, you'll know that the lowest that you see is $60,000 balance. Now, I'll show you where you can see that at. So what we'll do is we'll go to the main menu. From the main menu, we'll go to the income statement. Now, just a technical note, when you do open these up, right now I have the zoom for the page set to 100% because it fills out the page and I can see everything. As you open up the spreadsheet, yours may not be set to 100%. You will have to make adjustments to, get the everything to fill out to the page, your page preferences, if you will. But right now I got mine stretched out to 100%, and that's how I have it on each of the pages for the income statements, the balance sheet, and the cash flow. Don't freak out if you get there and there's a really small page. You can just adjust the zoom. When you do go to print, it's designed to automatically capture the print space, and so that part, it won't really affect anything if you adjust the zoom so that it looks how you want it to look as you're entering in the numbers. So this is the income statement and what it looks like on the income statement. The first thing I want to point out is that you will notice that on the right hand side of the income statement, there are links that get you back to, there's a start page, and then year two, as well as the rest of the years for the income statement. So that'll let you bounce around and kind of see what's going on a year to year basis for the income statement. You can see here on this first year, our total revenue, our cost of goods sold on a month by month basis, breaks it down on a quarterly basis, and then the yearly total as well. As you scroll down a little bit further, we have our expenses, our operating expenses on a month by month basis, and then our yearly total. And then at the end and at the bottom here, basically whether or not we have a net income or not, or whether or not, you'll see that there's a lot of red because we are losing money for the first few years of the business before it begins to turn around. All right. If you click on the other links here, this is year two. So you'll have that same information for year two. You'll notice now we're starting to make a profit. The business has turned around. Year two, you got year three, year four, and year five is here as well. Now, we made the adjustments here. I mentioned before that these just have annual growth. So as I go back to the income statement, I'll show you what I mean by that. We'll take the bakery, or actually we'll take the coffee, the top line here. You'll notice $4,000 for the first month as we entered in, 4,040, 4,080. It just grows gradually until you get to the end of the year and you got your 12% increase. And it does that for each one. However, we know that business doesn't just go up each month. There are ups and downs. There's some good months, there are bad months. And so you may need to make changes to reflect that. Some businesses, such as cafes and coffee shops, may have seasonal ups and downs. And so one of the things that you can do is you can go in and you can make changes to the monthly income here in the income statement. Now, one thing you should keep in mind, you'll notice up here that there is a formula for the income statement. When you do make changes to it, it will write over that formula. I'll show you what I mean. Let's just say in June, we expect business to, I don't know, we expect an increase. People are going to be out and about more, so they're going to stop by the cafe more. And we're going to have a lot of events and things like that going on. So we expect the business to increase beginning in June. So instead of the $4,204 in June, I'm going to expect, I don't know, $5,100 in June. So I've made that change. What you'll notice is that in the rest of the cells, it continues with the formula of the gradual increase, but it picks up from the dollar amount that you entered in there. So in July, we got 51.51, 52.03 in August. But if you click here, you notice that that formula is gone. One of the things I recommend as you get started is you make copies of the spreadsheet, or at least have a copy on hand, just in case you decide that, hey, I don't like the changes that I made. You at least have a copy of it where you can kind of start over with. But what this allows you to do is it allows you to make changes to it, and then these changes will carry over to your cash flow, your balance sheet as well. So you don't have to, go to those and making changes. In fact, the only sheet that you need to make any changes to as it relates to ups and downs of the business is the income sheet. And you can go in on a year by year and make those changes. So let's say again, this year, we're going to see a little bit of an increase and then it'll kind of go up. And then let's say that in fall, we'll see that taper off. So let's say here, we'll go back to 45. And then you'll notice that November and December, the formula will continue with the 12% increase to get us. All right. Now, you can go into year two. And let's say you expect to do the same thing in year two. You can show the increase there. Let's say that's going to be 52.50. And you'll notice the formula will just continue for the other months. And you can do that for each of the years. And then you can do that for each of the products that you sell. You can go in and make manual changes. And those changes, like I said, whatever you make, changes that you make on this sheet will affect the cash flow, the balance sheet as well. So those things will automatically update. You can do that for things such as your, cost of goods as well. You can certainly do that. You can do it for your expenses, but it's in short, the income statement is the only place that if you need to make changes to account for seasonal things, this is the only place that you need to make those changes. It will automatically update the cash flow. It will automatically update the balance sheet, and you don't need to make any changes to those things. All right. So speaking of the cash flow and balance sheet, we'll go back to our main menu here. We'll take a look at what the cash flow summary looks like. Again, I have it set to zoom of 100% here in the corner. You can set yours to whatever you like. In most instances, when you open up the spreadsheet, it's going to be a much smaller one set to 60 or 65%, but you can adjust it to whatever you like. So this is the cash flow statement. Just kind of shows you the cash flow of the overall business. What I like about this is I like looking at the ending balance. So that gives me an idea of what our ending cash balance is, and if we need to, if I want to be comfortable with that or not. Now, keep in mind, this business still does not have, it runs below a minimum of 12-month reserve. So if that is something that is an issue for yourself or your investors, one of the things that you can do is you can increase the amount of the loan that you take in or increase the amount of starting investment that you take in. And that'll help you to start off with a larger cash reserve so you can increase your loan or add a second loan, or increase your stockholders' equity and assets, if you will, and add that in, and that will show you starting off with a larger cash amount so that your cash flow does not fall below the 6 or the 12-month period. Okay, so what we'll do now is we'll take a look at the balance sheet. And what we'll do is we'll just click on main menu. That'll take us to the main menu. We'll scroll down and click on balance sheet. And this takes us to year one of the balance sheet. You can see balance sheet year one, Jay's Cafe. For the most part, the balance sheet is just it's a statement of the assets and liabilities that the company has on hand at any given time. So you'll see a month by month of the assets. There's that depreciation that I tell you about that factors into so many things, including that break even. There's the owner's liabilities, the owner's stock as well, that is in there. And then you have that for each year. There's year two, and then year three. Years four and five don't give the quarterly, they just do the total. So that one's a little bit smaller sheet. And essentially, that is it for the balance sheet. Again, you don't need to make any changes on the balance sheet. All of that stuff is handled through the start sheet. And any other changes that you do make will be made through the income statement. And so that is the balance sheet. Well, the next thing that we'll take a look at as is the charts. If you click here on the charts, 5-year summary, just a few different charts for you to take a look at. Gives an idea of what's going on with the business. Everybody likes charts. There's a more charts page. I'm pretty sure that I got to make some changes to the more charts. Here you'll see just a few more options for charts. Not much that's going on here, but let me go back to the charts page here. Once you have played with the financial projections, once you've made all the necessary changes on the start page, once you've gone into the income statement and made all of the changes that you want to make there, the business plan looks good. You're showing profitability. The minimum balance is where you need it to be, and I'll show you where you can look at those things again. It's on the dashboard. Your minimum cash reserve is not too low. Maybe even show break even. Again, just because you don't show break even does not mean that you're not profitable. Sometimes you show break even outside of the 5-year period. But if that is important to your lenders or business, then you will have to go back to either the start sheet or the income statement and make adjustments to either your income or your expenses or your loan amount or one of those things to get you in a better position. But you can see here what you got. Your minimum cash balance, 61,000. You do start off below 12-month reserves and below, 6-month reserves. So again, you can take out a bigger loan or take in a bigger investment. You do show profitability. You show profitability by August 31st. And so if those things are okay with you, the next thing that you want to do is that you want to print. Now, there will be a separate video that I will do for the printing. However, I will explain the experience, what you can expect when printing. The print function, the print button on there also uses a macro, and the reason that's done is because it's designed to automatically capture the area and make sure that everything's nice and neat for you before it prints out. So if you are using the Google Sheets version of it, when you do click the print button, and there's a couple of options for doing the print. I'll go to the main menu to show you the option. There's a print full plan, and then there's a print charts. The print full plan will print the entire plan. It will print 5-year income statements, 5-year cash flow summary statements, and then 5-year balance sheets. It would also print all of the charts to accommodate those things. If you click print charts, it will just print out the 5 years worth of charts for those things. If you are using the Google spreadsheet or the Google Sheets version of it, when you click on print plan or print full plan, what it will do is it will automatically create PDFs for each page in the spreadsheet. So there's 5 pages for each for the income statement, balance sheet, and cash flow for each of the years. You will see those labeled in the title. It'll say income statement year 1, income statement year 2, 3, 4, 5. Same thing with the balance sheets. So it will automatically create 15 PDFs as well as PDFs for the charts that you can then automatically print, put in the proper order. Again, each page will be labeled, and you can see that on, for example, here. You have your income statement. It'll say income statement year 1. When you go to year 2, it'll say income statement year 2. Same thing if you go to balance sheet. Realize we didn't click on that. Balance sheet year 1, year 2. So when they print out, you'll see those. You also see those in the title of the actual sheet, and that's how it works with Google Sheets. For Microsoft Excel, when you do Microsoft Excel, you will see your normal print preview screen that pops up. That'll let you go through and kind of see a preview of each of the pages. You'll just notice that there's an individual page for each year of the plan for the balance, income, and cash flow, and you'll notice the charts. And then from there, you can click print. It'll print them all out in order for you, and you can do what you need to do from there. And that is it, ladies and gentlemen. Like I said, there will be a separate video that I do. I apologize. I have a new printer that I haven't quite set up. So do a separate video for printing them out to show everyone what it looks like. But it's designed to have one-click printing. If you click on it, again, everything is done for you. You don't have to go in and outline the print areas or anything like that. You just click print. The macros that are in it are designed to capture the print area and print everything out nice and neat for you. With that being said, I am going to conclude this tutorial. If you do have further questions, you can feel free to email me at any time. You can also reach back out to us through the method in which you actually purchased the spreadsheet. So you can give us a message anytime. We'll happily answer within a 24-hour period. With that being said, ladies and gentlemen, I thank you for listening to my tutorial, and you'll have a great day.